Hey everyone, Kelly Weber here with Mike Lamparillo from Advisors Mortgage. Mike, thank you so much for joining me today. I really appreciate you taking the time.
Happy to be with you, Kelly.
Good. I'm happy to have you here. So Mike has been in the industry for 30 years.
Yeah, I get it.
30 years. And with everything going on, everybody's talking about the coronavirus aid and, mortgage forbearance, mortgage forgiveness. I just thought it would be a really good opportunity to speak about it so our residents will understand exactly what's going on, that they just can't stop paying their mortgage. There's policies, procedures, things you have to do in order to take care of this. So talk to me.
Well, first of all, you're absolutely correct. And I just wanted to tell everybody, including yourself, that Advisors, as well as, I heard you guys, we're doing everything within the guidelines with COVID in terms of we're still doing our closings. And I just want to wish everybody success and health, really, through this entire event, because I think we're going to come out of this strong. But I'm here today to talk to you guys about how COVID is affecting the industry, and in particular, the word forbearance that's been thrown around a lot. First, what I thought is I'd read you the actual definition of forbearance.
Good.
Forbearance is the action of refraining from exercising a legal right, especially enforcing the payment of a debt. Okay? So forbearance is not forgiveness. Okay? It is just kind of a delay. And I will tell you what is gone on with the government and what they're saying and what the lenders are actually saying and how they differ. Okay. First of all, a forbearance, like we said, is not a gift. It is a temporary delay of the mortgage payments. And the big question is, number one, does it affect my credit? And number two, how do those payments get made up for? Because the bank isn't just walking away from them.
Right. So can I interrupt you for a second now that you're saying that? Because I've heard that sometimes it depends on your lender. It's either tacked on to the end of your term, or you have a certain amount of time to pay for it, and you need to sometimes give it in a lump sum.
That is absolutely correct.
Okay.
And that's where the big challenge is, Kelly. In other words, one lender's doing it one way and another lender's doing it a different way. But what I can tell you that's for certain with the forbearance is what's happening is all lenders in the state, in our state, and really pretty much throughout the country, will give you a 90-day forbearance. Some will give you 6 months, and based on severity of job loss and issue, can continue as much as a year. So the big question is, well, first of all, it doesn't happen automatically. You don't just wake up and decide not to pay your mortgage or say, hey, I'm in the forbearance. You really have to contact your bank, and most banks are providing online information and the ability to get into the forbearance.
Gotcha.
So you have to actually do that. Now, once again, the big question is, now what happens? Let's take a typical 90-day forbearance. Let's just forget about 6 months or a year for this argument. And let's say everyone's had a good temporary issue and they're going to take advantage of the forbearance. The good news for the consumer during this crisis, there will be no negative reports to the credit report.
Good.
Okay. No late payments or nothing like that. Okay. But I'm going to get to how this can affect you later with late payments and things of that nature. We're unsure of what's going to happen in the future. But there will be no late payments recorded on your mortgage. Now, in 90 days, the one option is, and this is the first option in all forbearances, the 90 days of forgiveness, the 3 months of mortgage payments will be paid up all at once. So then your fourth payment, you would be, your first payment after the forbearance, you'd be making 4 payments. Okay. And that, as you can see, is not attractive.
No, not at all.
Right? So that is the type of thing I think in this particular case wouldn't really help people, because the problem they have is they've lost their income. It's not like they're going to magically get it back and be able to catch up like that. So that, to me, is not one of the good options. Okay. The next option is, Kelly, what you said. What they'll do is they'll take those 3 months of mortgage payments. Let's say it's $3,000 a month, and they'll spread it out over 2 years. and say, look, you got to come up with $9,000. So we're going to add, what does that come to? $300 a month or
Right.
two,
To
whatever.
your mortgage
Correct.
for
And
the
in
next 2 years.
correct. And then at the end of 2 years, the forbearance will be clear and done. Okay. Thirdly, there is this tack it on to the back end is kind of, it doesn't really happen like that because in that particular case, there has to be a modification. If you're going to change a note, anytime you change a note, it's either a refinance or it's a modification. Okay, so so if they do change the note, you're going to get what's called a modification, and they're not always guaranteed because there's different requirements by different banks to get one of them.
So in that situation, do they have to go through providing documentation showing proof that they're out of work and readjusting the mortgage? Like,
Good question, and I'm going to give you pre-COVID and COVID.
okay.
Pre-COVID, the answer was absolutely yes. They would
Okay.
not give you a modification, and typically modifications, from what you've heard, for people that are behind on their mortgage, not people that are
Right.
on time. So modifications pre-COVID, yes, you had to supply all that. Post-COVID, nobody knows. We haven't
Okay.
gotten there yet. I don't think there's anybody that's really spoken to the bank in detail. Most people have done all this online, okay, and gotten their forbearances granted. And everybody should be getting things in the mail. Most banks have the ability, you put in some information and you click the button and they send you the forbearance documents.
Okay. Gotcha.
Okay, so
Gotcha.
what I'm saying is no one really knows,
Right.
unless you've spoken to your bank and they've told you, look, this is what we're doing. In 90 days, you have the option of doing X, Y, and Z, and this is what it is. But so far, remember, we're just dipping our toes into this.
Right. This is
Okay?
just the beginning of it.
That's correct. There's another thing that's very interesting. Go ahead, no, Kelly, you want to say something?
I was just going to say, I mean, here, everybody hears forbearance. Oh my gosh, we could delay our mortgage payment. And you know what? When it's too good to be true, it's too good to be true, because at the end of the day, you're paying it one way or another. And it's kind of scary to have to, if somebody has a $3,000 a month mortgage, to come up with $9,000, $10,000, $12,000 on their fourth month. But who has that, especially being out of work?
Well, you're not going to, like I said in the beginning, but you'll see that's one of the options on the forbearance. So I'm just telling you what the options are.
Okay.
In terms of the viability, that's not the best one. But what I can tell you, and the banks, I'll give you an example. You lose your job for a couple of months. You know how far, you can imagine how much a family of four falls behind.
Right.
I would rather have the forgiveness and then pay an extra $250 a month for 2 years, or $300 a month for 2 years to make it up, knowing that I was able to get that breather that I desperately needed now. So if you're at work and you get laid off and unemployment's not enough for you to carry your life, which for most of us it isn't,
Right.
you're going to have to do the forbearance, and it really could be a good thing though, Kel. And I'm going to tell you this right now, given the circumstances, I can't imagine a bank not working with their clients to come up with a reasonable forbearance payback plan and or a modification.
Especially now, right? Agreed. And now let's talk forgiveness. What is the forgiveness?
It's a fairy tale. No.
Yeah.
Forgiveness means, look, you don't owe it, and that's it. And really, I have to tell you something. The language is wrong. When everybody talks forgiveness, it's factually incorrect. It is not a forgiveness situation. It's really a temporary, holdback or transfer on payments, but just to get the money, just to not make the payments. It's really all it is. It's not forgiveness. Now, there have been cases in the past in modifications when people were in foreclosure and down a few years where they did forgive principal.
Okay.
Just like they do in a short sale. But that is a different topic, I think. I don't think that's relevant to what you want to get across today.
Right. So, and again, I'm going through this. I mean, you're in that industry, so you understand it a little bit better. I'm coming at it from a homeowner. So
Sure.
forgiveness in this sense would be, okay, we'll tack on, instead of having to come up with a certain amount of money, that the 3 months up front, they would tack on an additional certain amount of money each month until you pay that back,
Well,
per
that's
se.
forbearance. It's really not forgiveness.
Okay.
Okay. That's why I think the language is wrong. Because to me, if you're forgiving something, it's over. It's done. It's
It's over.
gone.
It's gone.
Yeah.
Yep.
And that's not that is clearly not the case here. In any which way, whichever forbearance option is given, that is not the case.
Okay. So there is no forgiveness in all reality.
Well, yeah, there is. They're forgiving the fact you can't make the payments now and not letting it crush your payment, crush your credit. To me,
Okay. All right. So
that,
that's the
that
forgiveness end of it. Let's call a spade a spade.
yeah, I would say so.
Okay. Yeah. I just want to make sure. Okay. So then, for the forbearance, you do have options, some options better than the other. But what I'm trying to get across to everybody is you need to contact your lender, whoever your mortgage is with. You speak to them or go online and get the process started. You don't just shut down and say, I'm not paying for 3 months.
Some people, and I don't want to make jokes in a time like this, but Advisors is a big company. We're servicing some loans. So we've had people that are late and they really talk about, oh, I'm part of what they
COVID.
call it, the mortgage, whatever. I don't want, I forget the word, but the point is, so what we're doing is they're letting us know if anybody doesn't make their mortgage payment, and we're obviously calling them to say, look, you know what? These are what your options are. If you need us to work with you, we absolutely will. But this whole, people in the beginning thought it was really, like you said, hey, look, I don't have to make 3 mortgage payments and I'm good going forward. So
Yeah. Yeah. So, all right. Well, listen, this has been very informative, and I think you broke it down very easily. I totally get it. And again, they send you papers upon papers with all this language, and you read it and it's overwhelming. That's why I thought it was great to get on the phone with you and have you explain it. And I thought you did a great job. So thank you very much. I always appreciate our time.
thank you. There's one other thing. If we have a couple more minutes, I just want
Sure.
to share
Yeah.
something with you all that I think is relevant, okay, with what's going on. How does this COVID affect the mortgage process,
Mhm.
okay, and if you want to refinance in the near future?
Oh,
Yeah.
because rates are low.
It's funny. We've been having meetings every Friday. Okay, we had ours today because tomorrow's Good Friday for all those observing. We've been having meetings every Friday since this has been going on about how to deal with this. If you're furloughed, we can't close your loan. Okay. If you
Mm.
take advantage of this forbearance and you're still in forbearance in 6 months, you won't be permitted to refinance. Okay. And
Oh,
if you read
wow.
the language in these forbearances, yeah, while you're in it, while you're in this payback plan, you can't really refinance. Now, the banks are saying that. Can you go to another lender to refinance? The question is, we are not sure how the
Okay.
industry is going to look 6 months from now on people that took the forbearance and got into a payment plan. Now, if you took the 3 month forbearance and paid it right back, we're pretty sure that all the lenders, and again, we don't have any factual data yet because
Right.
it's early, but we think that most lenders would be forgiving of that and allow you to refinance.
You
While
know,
you're in a forbearance, I don't know that that'll happen once as we get down the road. And that's a conversation that we can pick up in 6 months, Cal.
right. It's, you know what? Everybody's in the same position. Everybody's in it. We don't know what's going to happen. We don't know what it's going to look like. We don't know. And I think this is the first time ever, even, we both lived through 9/11, Sandy, it, and while they were horrible, devastating things, there were things we knew how we were going to proceed with things. Like here, we don't know. How long is it going to take for the businesses to come back? How long are restaurants going
Correct.
to open? How long is
Correct.
life going to resume? So, we are really at a very unique place in life right now.
I agree.
So,
I agree.
well, I hope you will come back on and talk with me again and share all
Anytime,
your
Cal.
knowledge. I appreciate everything. I love, talking to you and working with you. And thank you so much for
Right
spending
back
time with
at
me
you,
today.
Cal. Stay safe, and anything we can do for you, let us know.
Thanks so much, Mike. I'll talk to you soon. Safe to you and your family.
Take care.
Take
Bye-bye.
care. Bye.